My friends, what is going on? As promised, this is going to be a quick little look at Tesla and GME and some trade ideas. I was just kind of reviewing some charts, and overall, I was kind of like, I kind of like these two looks. And obviously, I know a lot of people who follow me, both here on YouTube and on Twitter, both like these stocks a lot. So, first and foremost, thanks, of course, for tuning in. Please like and subscribe, all that good stuff. You guys know the deal. Nothing I'm giving you is financial advice. Just talking about what I think are potentially really good setups in the market. I'm going to talk about some bull and bear cases that potentially could happen. And yeah, do with that information whatever you will. At the end of the day, the decisions that you make are between yourself, your family, and your portfolio. And I just want my information to help give you better options of doing that, at least giving you more information. That's why I always talk about, like with my Discord community, it's just having like-minded individuals where you can always bounce ideas off of. It's a tough world out there, right? Especially in the trading world. And so just having that, okay, I'm not alone, and whether we agree or whether we disagree doesn't matter. It's having a bunch of different ideas will allow you to go, oh, you know what, I didn't even see that, or oh, you know what, I didn't even catch that setup. It's just important. And so anyway, that's the information that I try to provide. So let's jump into it. So as of right now, Tesla definitely burned me yesterday. Full disclosure, I'm in some calls that are pretty beat up as of right now. And this is the setup that I posted on Twitter, where you essentially had this ascending triangle look. You had the breakout into the day. I was really hoping for, at worst, maybe we come down here and retest like the 389, and then you kind of get that J hook up and out and really push that 405 level. That did not work. My reads overall on the market, on the indexes, have been very good lately. Like for instance, as a SPY, I wanted in QQQ wanted the three white soldiers look, and for those of you that were asking me about it, and they were like, well, why are they white and not green? It's because Japanese candlesticks were black and white were up candles, and black were down candles. It has nothing to do with race. It just tells you more about the world we live in. So anyway, I held my calls and then obviously got blasted today on the deal. However, still on the daily, overall, Tesla is holding support. And what I always teach my traders is treat support like it's support till it shows that it's not. The reality is the last few times Tesla has come down here and we kind of tapped into this imbalance that was created back over here in early December. This time right here, it bounced 14%. This time right here, we came into it, it bounced 17%. This time, bounced about 10%. So overall, our bounces are somewhere, between that 15, 17 to 10% range. So let's call it like 13, 14%. So we're back here now. I will say what I don't like about Tesla right now is the fact that on a day like today, where once again, the overall market made new highs, Tesla's over here making new lows. So it is definitely, discombobulated from the overall market right now. So I don't like that. And, maybe you're one of the people who like, well, it's because the guy running it's a Nazi. That's fine. This stock isn't for you, and I highly doubt you're watching this video anyway. So what I would like to see is it's going to need to move above this kind of 380, 330 level pretty quickly, in my opinion. When we scoot all the way back over here to previous all-time highs, this 414.50 and this 380, 330 is really the range that I wanted to see Tesla hold. It blasted through it. I wanted it to come back, just kind of build a base in here, and then, circle on up to new all-time highs. So I don't want to see a whole lot of trading below here. Tesla needs to put in a good-looking daily candle. But overall, and shout out to Trey, he commented on my post too. Basically what I'm looking for is overall, can we get kind of this big old George W up and out of here? So we just want to avoid new lows. The reality is even post Monday, Tesla still held up the lows from today. Now, we don't know what it's going to do by tomorrow morning. It might gap down below that. If it does start gapping down below 370, that would be a much more bearish look, in my opinion. And then anything above that, and then of course anything if we were able to get a gap above 383, which I don't think is super likely because just how weak it's been, but if we were able to get a gap above 383.30, then I would like it very much from a bullish scenario. What this setup is reminding me a lot of is actually Roblox back over here. So it kind of had this descending triangle look, and this was a peg play, a post-earnings gap play that we tracked out in the Discord, and it looked essentially like a descending triangle. And if we get over in here, you can see that down here, like these daily candles it was putting in here were kind of ugly until it had its breakaway gap, and then it continued to push on up. Then it came back, found support at these previous highs, and has just kept running and running and running. And this is where I really started covering it a bunch in the Discord. And like I said, some people made great money off of it. Other people like me, we just missed the boat. I kept saying, I'm going to get into it. I'm going to get into it. And I just didn't. And, shame on me. But it's still, this was a great setup, right? So we have this kind of gap and balance play right here. Treating support as support. What I'd want to see is that curl and that move to start to come out of here. Because at the end of the day, guys, trading is all about what is your risk to reward scenario. A lot of people will say, well, there's a rule of thumb if you need at least 2 to 1. I personally like at least to be a 3 to 1 risk to reward ratio. What this allows you to do is you don't even have to have a winning record over time to still be a profitable trader, but you need to take good risk to reward trades. So the way that I would look at this setup on Tesla right now is 2 different ways. So let's just assume we open flat tomorrow. Let's see here. That's the wrong one. That would be if we wanted to go short. So if we wanted to look at it from a long position, I would say things are going to start looking invalid if you start getting below 370. So just kind of move this up here relatively as close as we can. Anytime you trade around like key psychological numbers or round numbers, I usually recommend doing like a point or two off of that so that way you can try to avoid any liquidity sweeps that may happen. And then what I say, the move topside was anywhere between like 12 to 17%, I believe. So let's just kind of say right in the middle around 14%. So a 14% move up and out of here takes you right to about 430. And I like that because 430 is going to be tough. Really, even kind of that 420 to 430, you'd be getting into some resistance. So let's look at both. So at 430, now you've got that set up, and it's a 6.6 to 1 risk to reward ratio if you take a trade like this. Now, if you're taking a trade off of a daily chart, which is where I recommend you get your ideas from, you can go to lower time frames to decide maybe an entry or an exit on stuff. But overall, my personal opinion is I like to start at the weekly basis just to kind of get an overall, like, okay, what overall is this chart really looking like? That's why when I post things like Palantir and Hood, going through those accumulations, now going through markup phases, that's overall going, okay, this stock, in my opinion, is going to overall be in a bullish trend. So for the most part, I like to go the direction of that trend. Just like Tesla all of last year, when it was clearly going through distribution in January, I played a whole lot of puts for the most part. And then I think it was about April or May, switched. So anyway, I say all that to say that's kind of where I like to get my ideas from. So from a daily basis, right, this now gives you a 6.6 to 1 risk to reward ratio. If we bring it back down, even if you just wanted to play it back towards previous all-time high, that's still a 4.5 to 1 risk to reward ratio. That doesn't mean you've got to hold it all the way till there, like especially if you got anything that was low days to expiration or anything like that. But like I said, make sure you have time. So when I trade Tesla off a daily basis, I usually grab anywhere between like 2 to 4 weeks out is kind of what I've come to find is sort of my sweet spot. Because normally with Tesla being such a volatile stock, you're going to know if your idea is valid or it's invalid relatively quickly. But that gives you enough time to really see if your idea is going to play out. So that's the way I would look at it. Now, the opposite is true. That, like I said, overall, if you go, well, it's kind of a descending triangle, I'm expecting it to drop out. Well, like I said, descending triangle doesn't mean anything other than that's the way the pattern is consolidating. This looked very weak down here on roadblocks, and then what happened? Boom, it shot topside. So on Tesla, if let's say you did once you get below 370, then I don't hate overall playing some puts. Now, if it gaps below 370, I definitely would wait for some type of retest and rejection and then let it roll over and continue on down. When we kind of zoom out here, this overall uptrend from those April earnings, this is where I said Tesla had its meta moment and is overall been in an uptrend. So even if Tesla does something as long and as corrective, right, kind of just turns into this falling wedge and then just kind of winds up doing one of these before going, that's totally fine too. And certainly with the volatility there, you can play puts along the way. So if you're like the people who are like, I do inverse of whatever Colin does, then that's great. Enjoy being broke and staying that way. But if you wanted to say short position, I would say, okay, do a daily close above 383.30. I think that's when Tesla is definitely overall back in bullish territory. And then you just decide where you'd want to, play puts down to. The reality is even if, I said, this is why my personal opinion, sorry guys, I know I'm all over the place sometimes. I get all pumped up and excited. But for me overall, there's just so much support in this area because it's like, well, okay, as soon as you break that, well, then you have these tops right here at 360 that you're probably going to get a relief bounce in. So when you're like stuck in between these levels, I just go, I don't want to try to, play puts or go short side on this deal because I don't think the risk to reward is to the downside. Because even if you go, okay, well, let me do that. Let me go, okay, a daily close over 383.30, and I'm going to play that, right down here. That's only a 1-to-1 risk to reward ratio. So that's not worth taking the trade, in my personal opinion. Now, if you got way more micro on the deal and you're just doing scalps, that might be different. I'm just talking about a little bit more macro view. Now, if you say, well, I like it down here to this gap fill area, now you're at least at a 2-to-1. So you're at least in acceptable territory. Or if you go, hey, I'm going to play it down to this gap fill that happened right back here on Friday, that November 14th, now you're a 3-to-1. And that short position, if you go, okay, yeah, I think Tesla's probably going to stay weak and it's going to work its way down to this trend right here, then if you play it to there, like I said, that right there is going to give you about a 4-to-1 risk to reward ratio. And then you can go, once we get down there, once we get down around to that 330 or so, then I'm going to play this bounce to get it back going this way. So overall, that's just kind of what I wanted to talk about on Tesla. But at the end of the day, guys, if you never hear anything else from me, treat support as support, treat resistance as resistance until it shows otherwise. All right, let's jump into GME now. So GME, this one is getting interesting. The main reason I wanted to talk about that is honestly the day-to-day movements I don't really care about, but it is coming up to a big macro spot. That big macro spot is going to be this red line that you see here on my chart. That's going to be your 200-day moving average. This is the longest that GME has been over its 200-day moving average in a long time. If we go back here on the daily, the reality is this is the longest time it's spent above its 200-day moving average in 3 years. Yeah, 3 years and a couple months. So if you are a buyer of GME and you like the way that it looks, then we're getting into an important range to hold. Also, if we look at this on our visible range right here, this 25 area is one of the largest volume shelves in this range that we have bid in. So this is a key area to hold. This basically is just like the volume down here. It's just showing it on the side, and it shows where the buying and the selling has taken place. And the large majority of the buying in this range since Roaring Kitty came back in April of 2024, or I guess he didn't come back till right here, till May. But once he started posting again, this is where a large majority of the buying has taken place. So it's certainly an important area to hold. Now, I posted about this yesterday on Twitter that I was like, well, I don't really love the look of the premium. So, and this is what I do all the time on all the stocks that I want to own, is get paid to wait. So what you can do is you can sell a put on GME. Selling puts is bullish. Sometimes when people hear puts, they start freaking out and they go, "He's telling you to short GME. He's killing my MOAS and I can't take it anymore." And that's hilarious. But what it is when you sell a put, you are taking a bullish stance on the stock. This means you are either willing to buy the stock or you'll collect premium and go about your life. So, whoa. Okay, as I'm making this video, GME is just shot up 7% in after hours. Did Kitty tweet or something like that? Something must be going on. That's weird. Maybe my Robinhood's glitching out right now. Hold on. I'm just trying to make sure. All right. Well, I'm not seeing anything, but that's weird. Yeah, no, I'm not seeing any kitty tweets. Okay, it just dropped right back down. That's insane. I'm gonna post the picture that I took right now at 7:01. That's wild. Okay, let's get back on track. I apologize for that. So, because yeah, it must have just been the old Robinhood glitch. Because now it's back to $24.95. Okay, cool. So, my trading idea on this deal is honestly, it's not a stock that I want to buy calls or puts on. Like I said, that's up to you. But selling puts is taking a bullish stance. And the one that I would talk about is at 25. So like I said, 25 is a big key area to hold. And you'd be like, well, Colin, why would you do that, right? Because it's under 25 right now. Well, as I sit here making this video right now, 25 puts for next week are paying a premium of $85. This means when you sell the put, you are agreeing to buy 100 shares of GME at a price of 25. So that means you need to have 2,500 in liquid capital. If that's what you do, you get paid a premium of $85, and that 85 divided by your 2,500 is a 3.4% return on your money. Now, this is where everybody's always like, well, that's not sexy, that's not cool, and that's not a good screenshot. No, but if you just made $85 a week throughout the entire year, that turns into $4,420 throughout the year on your $2,500 principal. Now, that's selling puts right at the money if you wanted to be safer. At the end of the day, I always aim for like a 1% to 2% return each week. And no, that's not sexy on any one given day, but good luck going and trying to find yourself a savings account or anything like that. And the reality is you're getting paid to wait. Right? Rather than going, well, I'm going to wait for that 200-day moving average. Well, what if it doesn't get there? However, when you agree to buy at 25 with your premium factored in, your break-even price on GME is $24.10. Right now, the 200-day is sitting at $24.31. So even if you did that, you're getting a better deal than waiting and buying at $24.31. Guys, this is how you have to think if you want to be a successful trader, not just stunk go up. And what I like about GME here, so this was the August 5th, carry trade fiasco. The reality is GME would have never opened up right here if it wasn't for all that BS that was going on. So you really kind of have, if you go, okay, well, let's say it would have opened up, pretty close to that, like right around 20, right around Roaring Kitties. price, and then here, and then here, you really kind of have an inverse head and shoulder look that you've broken out of, and you come back and you've tested. Plus, you have the confluence of your 200-day moving average catching up. It's a great spot if you're a believer long-term in the company. It is a great spot to add shares. It is. And regardless, now, so I want to be clear. So what's my risk? Well, obviously the risk is you'd agree to buy at 25 and it just keeps dropping and dropping and dropping and dropping. That's always the risk, right? The risk of buying any stock is I bought it and it starts going down. And also too, the risk could be that it comes down to that 200-day moving average and then, Roaring Kitty comes out and tweets something and it sharply goes up. And you're like, well, I would have been better off, just buying the shares outright. And the answer to that is, you're right. But last time I checked, I don't have a crystal ball that tells me exactly what's going to happen. So it's like on Tesla, like pretty much every single week, I sell some puts and I sell some calls. And if Tesla winds up trading, so like every week, I'll sell a call on Tesla and I'll sell some puts on Tesla. And if Tesla winds up staying range bound, all I did was collect all my premium up here and all I did was collect all my premium down here. And all that premium I then use to buy more shares. Literally thousands of shares of Tesla I have bought off a premium. When you sell options, you get to be the casino. When you buy options, you're the gambler. And when you're the gambler and it pays off, awesome, then it's a huge win. And I'm not telling you not to buy calls or puts. I'm just telling you that selling puts at key support levels, you're getting either paid to wait rather than just waiting. And time is money and money is time. So you're getting paid to wait to buy at the levels that you would already want to buy anyway. And if you go, well, I'm not buying unless it gets to 20, then that's fine. Sell puts at 20 if you want to. Now, the premium's not going to be as good, but the reality is going, you know what? I'm willing to take a shot on GME, buying on the 200-day moving average. It's just, there's nothing wrong with that. Like, it's a great time to buy. Another perfect example is what's going on with NVIDIA right now, right? And basically every time it's come down here, and let me clean up these other moving averages, but basically every time NVIDIA, you see how important that is. And I told my traders, I was like, I won't get real bullish on NVIDIA till it gets above 130, but the first step is you want to see it recover that 200-day moving average. So the fact that it's getting bought up right here, the risk to reward is to take a stab and to buy. When it gets on those 200-day moving averages, you can just see going back, right? Once it gets above it and things are going well, right? Imagine if you said, you know what, I'm going to take a shot buying NVIDIA down here at 16 when it came and touched its moving average. You'd be pretty dang happy. So it won't necessarily always work. Yes, there's going to be outliers on anything and everything that we do. But overall, you want to see stocks find that support at those moving averages. So like I said, it's more dangerous to buy calls or puts. It's way safer on these more volatile, meme stocks that have potential squeezes. It's always better to wheel them, in my personal opinion. I said repeatedly, when I first started getting really big on Twitter, is because I was talking about AMC a lot. And I always spoke openly about, like, I'm just wheeling the piss out of this. I'm selling puts and I'm selling calls 24/7. And I wouldn't have ever even come close to breaking even and even making money if it wasn't for wheeling that. So, but I'm not married to stocks. I know some of y'all are. But this is just a great idea. I think selling puts right around that 200-day moving average doesn't mean it's going to pan out. But I do think it's a great risk to reward scenario. And that's what I'm all about. I hope this video was helpful to you. Like I said, like and subscribe, all that good stuff, and we'll see how things turn out. Much love, guys. I truly appreciate you. Anytime I ask for the likes or whatever, and you guys respond. It makes me fired up. It makes me want to do more stuff like this for you. So I appreciate you interacting. Much love, and I'll catch you in the next video.